Good morning, everybody, and welcome to another Telling It Like It Is. My name is Jade Alberts. I'm a small business strategist influencer, and my passion is helping those businesses grow and succeed. Sharing my knowledge and stories is why I started this Facebook Live show. And if you have any questions during the broadcast or after the broadcast, please put them in the comments section, and James and I will get to them. I'd also like to thank Orangetheory Fitness for sponsoring this. They deliver fitness results in a fun group environment, and they ensure they achieve your goals through heart rate monitor technologies. Please contact one of their 9 Calgary locations. Today's Telling It Like It is James Bowen. Please check out his resume on the Facebook link as it is impressive. James, thank you for joining me, and how are you today?
I'm good, Jade, and thanks for inviting me. I'm looking forward to having a in-depth conversation around the topic of investing. That's a topic that's really undergoing a lot of revolution and evolution these days. A lot of interesting forces taking place, a lot of change taking place in the very nature of investing.
Oh, no, absolutely. And that's why I was so excited to have you on. I know we met through Startup Canada and the Twitter, and I really appreciate you taking time out of your busy schedule to share your knowledge with us.
Really happy to do that. I'm really supportive of startup communities and startups themselves, and the investing side of it is really the fuel that companies need. And I'd like to see more retail investors, more average Canadians get involved.
Oh, I couldn't agree more. I mean, that's a great statement to start it off. I'll give a brief introduction of James here, and then we'll get right at it. So at age 13, he developed his first computerized video game. And age 21, while still an undergraduate at the university, James co-founded a software company. Over the next 20 years, he and his co-founders grew an international client base. Dr. Bowen has been interviewed on the internet, radio, magazine, TV, newspaper, both in North America and Europe. He is active with technology companies and investors, regularly provide advice to technology company, and is the author of 4 books. He is a founding chair of Startup Canada Awards and an angel investor. So I guess when you started your tech company and sold it, I mean, I've not talked to a lot of people that have done this. Can you talk about walk us through that entire process?
Sure, absolutely. So the startup back in the day when I started, the business plan or the concept of starting up was really rudimentary compared to what it is today. Basically, it was myself and 2 engineers. They had more of the technology side. I had a combination of software and business. And basically, we were seeing the evolution of computing and thought that we should get involved in that. And that was the extent of our thinking. We originally started more in the hardware side, and then evolved more into the software services side, and then eventually developing intellectual property and some different products. And when we went to sell the company, there was a number of different choices that we had. We had a number of American companies, large organizations that were interested in, as well as smaller organizations. But really a keynote ingredient in which they were interested in was the market that we had, as well as the intellectual property. And those were the key selling points.
No, absolutely. That makes a lot of sense that people are interested in that. So when you started that company, did you have angel investors, or were you just, bootstrapping that?
We were doing the bootstrapping approach. We started off by getting funding through consulting. So we were selling really our intellectual capability that we had through that, and we used that to fund the original hardware development, and then moving into software. As computing evolved over the years, we saw quite a transition from hardware becoming more commodity-like, software becoming where the profit was, and then onto the development of intellectual property. But that we funded through, as I mentioned, services. Some of my later companies, I've done the angel investing myself in them.
Okay, no, that's interesting. I guess to kind of take a little spin on that. When you are looking at investing in a company, a technology company, what do you look for?
There's a couple of things that I look for, and some of them I'm sure you've heard before. What is the opportunity? What is the competition? What is the product itself? But one of the things that I look for is the management team's capability to evolve over time. So typically in the startups, particularly in today's era, we see evidence or data-driven evolution of companies, where the company is evolving based on the validation that they're doing with the customers. So that suggests that the management team needs to have that data-driven approach and the ability to adapt. And those are really prime ingredients. If they don't have that, if they're not willing to listen to others, that's a key indicator. Other indicators that I tend to look at are the nature of the product as to whether it can evolve over time. Because the first generation of product may not be where it ends up, in terms of direction. I'm not interested in products which are variations of themes. I saw one just the other day, which is I think a variation of some of the restaurant takeout products. I've seen variations on things like Uber, and things that are variations that a big company or well-established company can do is also not something that I'm interested in. So basically, it's the management team's capability to evolve, and then the intellectual property's capability to evolve as the market evolves, as the data drives it.
No, that is quite interesting to say. Yes, I've heard that, quite a bit before, but for you to point out, number one, whether it be the management team and the people, and the number two is listening skills, I think says a lot about, how things are going to evolve, because it is the people and it is their listening skills and their ability to pivot. So that is very impressive that you mentioned that. Those were the first 2 points.
I'll give you an example of that. I was looking at an opportunity recently, and I had some questions around the patent protection that this product had, because I saw that there was competing products out there, and this one company had 11 different patents. So I asked the question, well, patents are typically barriers to entry, and if they have these 11 patents, then why are all these competing products out there? What is it that these patents are protecting? And what is the gap area that other companies can come into? So I sent that off to the contact at the startup company, who was really more of a facilitator. He didn't know the answer to it, so he farmed that over to the president of the company, who never got back to me. And I'm thinking to myself, well, this is the intellectual property is a key component of the company, and if they're not willing to or able to understand or answer that, and not even respond, what does that tell me?
Oh, that speaks loud and clear in my opinion, and that is very interesting. I can't believe they never responded to you. That is absolutely shocking.
Yeah.
So I guess, you have authored 4 books and have been on podcasts all over the world. What do you think the biggest mistakes startups make, and what is their biggest challenge?
I think the biggest mistake that startups make, well, there's several, but one of them may be in the funding area. Funding or money can come in many different forms. It doesn't necessarily have to come from investment. It can also come from reducing expenses. It can come from the business model itself. For example, having prepaid customers is very different than having 30-day terms. Having open source software or architectures which are either fixed cost or variable cost in terms of their structure can be very different. So one of the mistakes that founders make is they don't understand the funding and the cost structure as different approaches to solve problems. We can take one approach to set up a retail outlet as a way of contacting the customer, or we could go online and e-commerce it. And these are two different cost structures. So many founders don't understand the potential around the cost and business model environment. That's one mistake. Another mistake that I see is they don't understand the key role that intellectual property makes over time. And it doesn't necessarily have to be patents. It can be trademarks, trade secrets, or other kinds of knowledge. So that means that the organization really has to be structured around a learning approach. And the ability for the organization to learn and to evolve from its learnings over time is key to the entrepreneurial experience. And yet many of them come to me with oh, I know everything. Here are all my assumptions. The other mistake that they tend to make is they don't understand the connection between assumptions and risk. Every assumption that we have in a business plan, whether it's market size, the price, competitor actions, are all risks, because if those assumptions are not validated or not hold over time, then they have an impact on the way the company is going to evolve. So many startups I see don't understand that the assumptions that they make, whether deliberately or inherently, they don't understand that those directly translate into risks. And they come to me with an idea that, oh, my risk is the exchange rate, or the economy may go down. Well, yeah, okay, that may occur, but where is your understanding of risk around the price that you assume that the customer will pay? And how are you going to move that risk, which is an assumption, into a fact? And the only way you can move that is by validating that with the customer in some way. The whole point of an entrepreneurial experience is to move assumptions into facts.
Yeah. No, absolutely. And I mean, I totally agree with that. And that's a great point. One of the first points you made in that, in your answer there, was talking about, the different types of money and fundraising. How do you recommend that companies look for VC right away, or try and bootstrap it? And what are some of the pros and cons of actually having an outside investor like yourself?
Well, as you're aware, there's a difference between the angel investors such as myself and a venture capitalist. Both of them tend to bring in a couple of things beyond money. If all they bring in is money, then that's typically not enough. They bring in their expertise and their network, and their network should involve the capability to line up the company with first customers or partners. So if an angel investor or venture capitalist can bring in first customers in addition to money, that's a tremendous more value. The other thing that an angel investor or venture capitalist can do is shorten time, in that if we have money today that we can do things, maybe we can do them faster or go through a stage in the life cycle quicker. However, if a company can use their own money, use the founder's money, or use other investment approaches, one of the things that they can do is lower the risk of the opportunity, because they can validate some of their assumptions and move further along in their life cycle. And if they lower the risk of their opportunity, then the ask in terms of the investor, the percentage ask, tends to be lower. If someone comes and they've got 10 paying customers with reoccurring revenue, the risk profile on that for the investor is very different than if they're still in the idea stage and they're just drawing things on a whiteboard.
No. Excellent point, and that is very true, very true. Now, you mentioned your network. I mean, you're an advisor for Startup Canada. You've worked with United Nations and worked with 12 universities in North America and Europe. And your network obviously must be very, immense. So, how important is that networking for not only you, but as you bring in this, expand on that a little more for when you bring into your investment companies that you invest in?
So the network that somebody brings to the table, I kind of segment it in a couple of ways. First of all, there are people in the network who will do you a favor if you ask them, and there are people that won't. So the people that if you ask them to do you a favor and they won't do it, don't have the same value. They may have a different value. The other type of network is the information source or the knowledge or the best practices. So in my case, some of the universities that I'm connected to or the various places that I'm connected to are a large pipeline of knowledge, best practices, and information. And in my network, I'm listening to many different people, what their ideas are and what's worked for them, where they think the market is going, what the status of the world is going to be like in a couple of years. And if a person can fuse all of those together to form a perspective of where the future might be and what we have to do today to be able to take best advantage of that, or how we can shape a future outcome, because in some cases we can take actions which will make one scenario more likely to happen than another scenario. So that kind of network, that information or knowledge network, is, I think, different than the type of network in which people might find lead users for you or investors for you, or the type of network in which people are there, but they won't actually do anything for you. They won't come in on a day like today and shovel your driveway for you.
Yeah, I wish I had a network of people to shovel my driveway. So I guess now to kind of the excellent advice. What's next for you, James?
What's next for me is lots of interesting opportunities there. In terms of the way, like, my focus tends to be fairly broad, and I tend to look for things that are in emerging industries rather than copycat solutions where somebody has seen something out there and they say, oh yeah, I can tweak this a little bit and put it into this market or that market. Because my hesitation on those is always, well, the established companies that pretty much own this market or that market, they can tweak things too. So I'm generally looking for emerging markets, emerging industries, and ideas which will really come to fruition in a couple of years' time. So there's many different areas there: quantum computing, IT security, the Internet of Things. AI, of course, is in full bloom now, but data analytics. There's many different areas there that are coming to fruition. One of the things that I'm also seeing a lot of change in is the very structure of investing is evolving. And we're seeing a lot of transition from very traditional investing in the stock market to much more private capital equity. And there's huge forces changing there, if that's a topic of interest to you.
No, that is. Maybe that's a conversation for another day. That is very interesting. Interesting statement. Well, I guess to kind of wrap it up, I always ask the same question of everybody. If you had one piece of advice for a small business, a startup, or an entrepreneur, what would it be?
I think what it would be is to understand the difference between assumptions and risks, as I mentioned earlier. We're very much in the era that startups are all about validation and data-driven development. Where is the market and what is the market saying? We can start off with some assumptions, but we need to change those assumptions into facts, and we need to focus on our ability to do that. So what I would suggest for an entrepreneur is you start off with a rudimentary idea, find a low-cost way of starting to validate your assumptions, and then evolve your company given the results. That's not necessarily new advice. That kind of advice has been around for a while. But not all entrepreneurs really recognize the necessity to start with a low-cost environment. I spoke with an entrepreneur recently, and I'm on the board of advisors of a company in Europe. There's a really interesting idea around training of memory and using software as a service to do that. But originally, they started off with a very traditional approach. Give us lots of money, we'll set up this infrastructure, and then we'll go to market with it. Well, why can't you set up that infrastructure really cheaply and start trying that with lead users?
No, very true. That is interesting. And again, I really appreciate you coming on today, James, and sharing your knowledge He said, you're the first one that I've had on to talk about investments and angel investments and even VC for that matter. So I really appreciate you sharing your knowledge and taking time out of your schedule today.
Anytime, Jade, I'm pleased to do so. It's quite an evolving topic, and I think that's the kind of issue that Canada needs to resolve. If I can put a bit of a pitch in there, we have Startup Canada, we have other organizations which are supporting the startup community, which is really great because, as you're well aware, Canada needs startups and entrepreneurs. It's a way of the future, and we have disadvantages in this country. We don't have necessarily the mentality that risk takers in the United States have. We don't have the money structure that they have. We don't have the easy access to market that they have. But the potential benefit to the country as a whole is enormous. So any kind of conversation and momentum that we can put into place to help make Canada more entrepreneurial. Go back to our roots. That's where the fur traders and the people that originally came over to Canada, they were all entrepreneurs.
No, valid point. This company, and I still believe it is the backbone. Entrepreneurs and startups and small businesses are the backbone of our country and community. And we definitely need to start promoting that, more, not only country-wise, but even back when you base on something like in Calgary here, it's got to be more supportive of that community.
I'd like to see 5-year-olds saying to them in a little group, talking to themselves and saying, yes, I want to be a doctor. Yes, I want to be a lawyer. And yes, I want to be an entrepreneur.
Yeah, no doubt. And there's no doubt there. Well, again, thanks again, James, for coming on. I really appreciate it. And a special thanks to Orangetheory Fitness. They have 9 Calgary locations. It's probably time to start a fitness ritual for yourself. So again, James, thank you very much for your time. And I look forward to chatting again.
All right. I enjoyed it. Thanks, Jade.
Have a great day.
You too.